Day live for October 12th. I'm your host, David Michalek from Versio, and today we've got again with us America's favorite credit expert, John Ulzheimer, formerly with FICO and Equifax. John, welcome back. That's 2 weeks in a row.
2 weeks in a row, I know, right? It's all credit
Two,
Versio all the time.
two. Yeah, we'll have our own channel here pretty soon. So we're doing 2 weeks back to back because the next 3 weeks I'm going to be out doing a little traveling, actually going to Smart Credit next month. And then the week after that, I forgot what I've got. And the week after that, I'm going to be in Costa Rica. So the first vacation that I've taken in a long, long time. So I'm looking forward to a well-deserved vacation. Okay. John, so we're going to talk about a couple of things. And for those who are just joining us, feel free to introduce yourself. Q&A lives are all for you, so please feel free to ask any question you like. The only subject we really don't talk about is specific credit repair tactics. Mostly this is just credit education and everything that you want to know about credit scores, and how the bureaus work. And we usually like to start off with a subject. And then, John, I definitely want to talk about this piece that you did, this non-hit piece from CNBC that you did. That's great. But what I want to start with, and the title of today's live is how credit reports, which we've had in some shape or form for, what would you say, over 100 years?
Yeah, Equifax has existed in one form or another since 1899. So,
Wow, okay.
123 years.
Yeah, okay. What I want to talk about is how, and maybe this is sort of a source of contention with a lot of people. I can certainly understand it, that credit reports, which I think in their early form, maybe a simple document to show your payment history, maybe with the local drugstore, the local, I don't know what, lumber yard or whatever you had to buy back in the day. It was usually a very simple thing to just access what was your payment history. But fast forward to today, credit reports are really not so much credit reports anymore. And as you know, it's commonly said in this industry, they have evolved really into reputation reports or character reports. And maybe you can talk a little bit about how we've gone from a simple document, which was just about our payment history, to something that is really used to judge all of us in a very big way.
Yeah, and so what you referred to earlier with the example you gave with the lumber yard and whatnot, were referred to as merchant bureaus. So you would have merchants who provided products and services in a local area, would share information with each other about how their customers paid them if they extended credit to their customers. So you'd have the dentist, you'd have the drugstore, you'd have, like in your example, the lumber. So kind of old school type of rudimentary sharing of information, and that was really what blossomed into essentially a low tech credit reporting type of scenario. And then those merchant bureaus kind of figured out pretty quickly that, hey, there's money to be made here. And they started kind of snapping each other up, and they started growing in size. And so that's where kind of the consolidation and the expansion, geographically speaking, started to happen. And then, of course, it accelerated over time. And then you ended up with really big credit bureaus that would kind of Pac-Man up the smaller credit bureaus, and
Yeah.
they would become, national credit bureaus in nature. And the information has swapped a little bit. And so now, obviously, if you look at a report, you're not going to see anything about how you pay your dentist and how you pay,
Right.
for lumber. That kind of stuff's not on a credit report. It kind of evolved away from how you're paying your merchants more so to how you're paying your lenders. And so now what you see on a credit report, obviously there are some exceptions, but those exceptions are more contemporary, and they're also still very limited. But so the information is almost always going to be some sort of a financial services company or a debt collector, with some exceptions. And the evolution of the credit report has gone from being really kind of monoline usage of how are you going to pay something else in the future to Are you going to be a good insurance customer? Are you going to pay your utilities? What kind of a tenant are you going to be? Are you going to be a
Yeah.
good employee? And so, really, even though they weren't designed initially for those types of usage, you know, it became evident that the information was important in that respect. And the one that's probably the easiest to quantify is insurance. So, you know, the quality of your credit report has an empirical relationship with how you are as an insurance customer. And that's not speculation. That's been proven over and over and over again, even though people hate it.
Yeah.
It absolutely has been proven. So that's where you kind of see it bleeding over into other things, and where it starts kind of getting um, titles like, "Oh, this is your reputation report," versus just your credit report.
Right. So one of the things that I've talked about for years, and I think when I came to terms with this a long time ago, because I think I spent the better half of my, I would say, my 20s, maybe even into my early 30s, not really understanding. I mean, I knew I had a credit report. I knew mostly I paid my bills on time. This is pre Great Recession, but I didn't really understand how anything worked. Apart from the fact that, well, if I have a bill, I got to pay it. I got a mortgage, got to pay it, car payment, so forth. But um, I remember one of the things that they did when I got a job at KB Home. This is like my first step into real estate, and this was probably what is it, 2000? Yeah, I was about 30, 31 years old, and I remember one of the things that I had to consent to, because you have to go through all kinds of background, fingerprinted, all that stuff. And I remember them saying, "Well, you can consent to a credit check," and I went, "Ooh, credit check." I'm like, "I'm not buying anything. I don't really understand what the whole purpose of this credit check is." And it's funny because I really didn't even think about that again until years later, and I got into credit. That was kind of a strange thing, and I didn't ask about it, but it just made an impression. Like, why would they want to check my credit? Well, probably for the same reason why my stepmother, who's now retired, who used to work for the San Diego Police Department. So she spent years as a detective, but in her final, I think, 5 to 8 years, she was a background investigator. And if you wanted to become a police officer in San Diego, there was 3 background investigators that were going to go through everything, talk to your friends. There was no social media back then, but they were going to dive into your background. And one of the things I remember her telling me is like, yeah, we got to look at a credit report to make sure there's no outstanding collections. We don't want anything to be there that can be an argument for being corruptible. Owing massive debt, having, like, if you ever hear about anybody who's on the take, whether it's somebody in a police department or a government job, or even in finance or any company, a lot of times they go back, look at the credit report, and there's certainly like you said about the insurance, that it's a good indicator. It's funny how they can look back on people where they've had problems with embezzlement, and that's where they see problems. So I remember it sticking with me going to work for KB Home, where I'm not really handling any money, but I'm certainly working with contracts. I'm working with people's personal information. I'm not pulling credit reports or anything, but there's a lot of, I'm collecting checks. So I just thought that was interesting. Like, they got to find out, they're going to run a credit report to see if there's any kind of a problem. So apart from, John, like maybe outstanding collections, unpaid bills, else do you think they're looking at on a credit report that might be an indication of risk? Say on the insurance side.
Yeah, the insurance companies use insurance models, and they're called insurance credit scores, which is a little bit misleading. They're insurance, they're credit scores based on a credit report, but they're not for the extension of credit. They're based or they're designed specifically to predict the likelihood of you being either a profitable insurance customer, or what's referred to that's called a loss ratio score. So comparison of how much you'll pay in premiums versus how much you're likely to make in claims,
Uh-huh.
versus a transactional type of insurance. So the likelihood of you filing a claim. And of course, insurance companies don't want you doing that. And so
Yeah.
if your credit reports are predictive of you filing claims, then that's when you're going to start seeing premiums being higher, or you're just going to get straight up denied because you don't have a right to insurance. You have to actually apply for insurance, and they have to approve it. But it's the same type of scenario with a garden variety credit risk score, where they're looking at things like the presence of negative information, what kind of debt you have, and that all goes into the modeling. And if having a low quality credit report is predictive of elevated insurance risk, then you're going to have a lower insurance score. It's hard to explain. Well, why is that? What's the explanation of those things? And it's hard to explain it, just like it's hard to explain it. Why does having high utilization on credit cards cause you to have a lower score? Well, because it's predictive of risk. That's why. You can come up with as many explanations as you want, but the real answer is because there's this empirical relationship between the information on a credit report and how you perform as an insurance customer.
Yeah.
That is based on science. The other things, especially when it comes to employment screening, that's not really based on hardcore science, meaning that there's no validations that I've ever seen in 31 years in this industry that draw an empirical relationship between the quality of your credit report and the quality of you as an employee. That really is more of, as you said, kind of the temptation factor. If someone has tax liens, you want them to be your tax accountant. If someone has judgments and just filed bankruptcy, do you really what kind of position are you wanting to put them in? Do you really want them to have access to sensitive information? So, and remember, of all the things that we go through when we get a job that may be invasive, the credit report is probably very low on the list. You have to take a drug test, you have to do criminal background, you have to take these personality, like the DISC profile and whatever the other Myers-Briggs and all that kind of stuff. You talk about voodoo. So really, if you look at it from that perspective, it's one of the things that's invasive, but it's not the only thing that's invasive. And some states have, they don't like that. And so at the federal level, it's still legal to pull credit reports for employment screening as long as you get the proper signatures and you make the proper disclosures. But some states have restricted the practice to only certain types of positions. And the example that I often give is in some states, it's Katie bar the door. It doesn't matter what job you're applying for. The employer can pull credit. It doesn't matter. In some states, the kind of the level of the position matters. So if you are applying for a job as a landscaper, then they can't pull your credit report. But if you're applying for a job as the chief financial officer of the landscaping company, then they can pull your credit report. Law enforcement, absolutely. Government, absolutely. All that stuff is still fair game. Even the TSA even publishes somewhere on their website that if you have certain information on your credit report, you don't even need to apply with them. And the last time I checked, I think it was $7,500 of defaulted debt. You don't need to apply because that's their threshold. So I don't know if that still is what it is, but I know that there was a time where that was it. And again, it's that whole, maybe 999 out of 1,000 employees, it's going to be a non-issue. But what about that one employee who does something? And TSA is no joke, right? It's not like you're changing oil. You're letting people through security to get on airplanes. And so it's a bigger deal, even if just one or two people slip through the cracks.
Yeah, it reminds me, Chef DeFlava is here with us. Welcome. Thanks for commenting. And for everybody watching, just say a quick hello. Doesn't mean you got to post a question if you're not comfortable yet. Again, remember, like I said early on, this Q&A is for you. John and I like to bring up a subject and chew on it for a little while and go back and forth. But really, a lot of times what we're doing is just waiting for somebody to pop on with a question that we can answer for you. So don't be shy. What you're talking about. Oh, go ahead, John. It looks like you're going to say something.
Yeah. So one of the things that I know you brought it up, and I think we should talk about this. This may take a while to talk about. Is so for those of you, and I don't know if David, if you can put that link in the chat box or in the chat string.
I certainly can.
So yesterday, CNBC aired.
Well, this goes to a YouTube video.
That's right. It's CNBC's YouTube channel.
Oh, gotcha. Okay.
Yeah. So CNBC aired on their YouTube channel a 15-minute segment that they produced about, well, I mean, the title of the video is Are Credit Scores Fair? But it really talks a whole lot more about things like credit reports. And so it tends to really expand out much more than the topic of whether or not credit scoring is fair. If you've got time, it's 15 minutes. It's actually very well done, but it's long. So if you're going to watch it, you might want to pop your feet up on your desk and grab a cold one and relax for a minute. But it's actually pretty well done. I was really expecting, when they called to interview me, I was like, oh man, I don't want to be part of a hit piece where everyone just like throws credit under the bus, except for John Ulzheimer, says good things about it.
The one guy on the island that's a big believer, right?
Yeah. But they didn't do that. They were actually very fair, and I told the dude who produced it that I appreciated that he kept it very fair. He actually had the same number of guests on the pro credit reporting side as he had on the con credit reporting side. So it wasn't one of these like really disproportionate type of arguments where you had 7 or 8 people yelling about it and one person trying to explain it without being angry.
That's rare these days. That's really rare.
Yeah. And I made the point to him that I really appreciated that he did that. And so hopefully he takes away that I'm sending him good thoughts and feelings, and I think they did a good job. But really, what the issue was a couple of things. It was about the use of credit reports, which is not credit score; it's a different thing. And then also, if the system is broken, what do you do to fix it? And that's where I think if you ask most consumers, if you look at the comments on that YouTube, and there's literally, I think like the last time I checked, like 80,000 people had watched it, and it's only been up for about 24 hours. And the comments are almost universally negative about credit, right? It's unfair, it's broken, it's stupid, it's, you're getting into debt, blah, blah, blah. Just the kind of the typical stuff that you hear from consumers. Yeah. I promise you, no one with a FICO 810 made any of the comments on the video.
For sure, yeah. It's almost 100,000 views right now.
Oh wow! So
change.
Yeah, it's getting a lot of attention. And the overarching issue is the system kind of hard coded to be unfair? And some of the folks were arguing that the way we grow up and how we're taught about credit from our parents kind of instills in us attitudes about how we manage those types of relationships. And if your parents and if your life experiences have kind of programmed you to treat credit and contractual obligations like rent and such a certain way, then your credit reports are going to be a reflection of that. I don't think anybody would argue that that's untrue. I think, however, that you got to kind of stop blaming your father and grandfather eventually for the actions that you're taking. And here's the argument that I think I was trying to make, which is it shouldn't come as a surprise to anybody who is being reasonable and honest about this issue that missing payments is bad, right? I mean, in what universe would anybody think that missing payments on something is okay or isn't bad or doesn't have repercussions? So,
hey, well, listen, we live in a day and age right now where people are getting student loan debt that they signed up for and agreed to pay dismissed, and somehow that's being interpreted, or the expression is that, hey, we've kind of earned this, that we deserve to have debt annulled just because we feel like having student loan debt annulled. So to a certain degree,
that's not really that's not really a reason. I mean, that may be those may be words coming out of your mouth, but that's not really a legitimate reason, because I feel like it is not a reason.
I'm not saying that it is. I'm just saying that's a prevailing feeling right now when it comes to a lot of debt.
That's right. But I can assure you, people that are not in student loan debt who actually worked to pay their way for college don't agree with that.
I'm one of them. Sure, I totally get it.
What if I don't want to pay my car note anymore? I mean, just because I feel like my car was too expensive, and now I kind of regret taking out that loan 3 years ago, and I think I've paid them enough, and so they should just be happy because they make $1 billion a week. I mean, these are really horrible arguments, right?
Yeah.
Um,
Yeah.
and 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 they tend to be made not by people who worked hard and made their payments on time and whatnot. So I
True.
think eventually some event while there probably is some truth to your kind of the soil that you grew up in, that soil kind of passed on certain attitudes about managing debt and using credit cards or avoiding credit for that matter. I think that's absolutely true, and that's a fair argument. But
Yeah.
I think eventually you've got to say, okay, I get it, I understand it. The line is drawn in the sand now, and I know that if I miss payments on anything going forward, it's on me. Because for decades now,
Yeah.
you've had credit bureaus telling me you got to make payments on time. You've had FICO telling me you got to make payments on time. And I think eventually, even though no one learns about this stuff in school, which is it is what it is, right? It's fine.
Yeah.
I think there comes a time where you can't just use that as an excuse any longer. Well, my great grandfather had a horrible attitude about credit, and that just kind of passed down generation to generation. So that
Right.
if you watch the video, there's a little bit of that stuff, and it's not set up like a Morton Downey type of scenario. I don't know if you remember Morton Downey, where
Oh, for sure.
he would just scream at the guests, and it would just Bill O'Reilly, where they would just argue the whole time. And this is not that way at all. It's actually kind of independent segments, really pieced together nicely. So please watch it and enjoy it.
Yeah. Excellent. Well, I mean, it's good to get some, both sides of every situation. I can't wait to see it now. And now that because a lot of the stuff comes up, I'm like, oh, I already know how this book ends.
Yep.
Jay, I know that you meant David. Don't worry about it, Jay. It's all good. All right.
Did he call you John and call me Dan?
You know what? That might be the case. Oh man. So along those lines, this is a good segue too. Um, and I see this quite a bit. In fact, I think I got a Facebook post today that kind of has this, a little bit of a taste of, hey, the bureaus are out to get us. In order, and I think I sort of blame the credit repair industry for this too. That when a lot of people go into that situation where it's time to do something about the credit, there's always this like us versus them kind of position. Like, well, we're going to battle against the credit bureaus for you, or we're going to go after the debt, But I have to admit, this was a belief that I had for a very short time, when I first got into the business, because one of the problems with people in the credit repair space is they get taught by other credit repair people. And that's a problem. That's a really big problem because, I don't know if we talked about this one time, John, but, a mutual friend of ours, for those watching, is a guy that used to work at TransUnion who told me that there's about 100,000 credit repair businesses in the U.S. I don't know if that number still maintains, but let's just say it's 50,000. Well, how many of those people actually have access to people like yourself, or the guys in the Occam group, or people who actually come from the bureaus and can say, whoa, hold on. Most of the stuff you guys are talking about isn't true, and this is one of them, that somehow the bureaus are not going to play by the rules, don't want to help you out. So I thought you might explain to those watching how much the bureaus are actually on your side and that they do care about the information that's on the credit report. Maybe we can go into a little detail on that.
Yeah, I think it's maybe giving the credit bureaus a little bit too much, all of them for that matter. I think it's giving them a little bit too much credit for doing something other than like compiling credit reports and storing information. It almost suggests that there's this wizard kind of behind the curtain,
right,
that works at the three credit bureaus, that they're like pulling levers and stuff, trying to screw consumers. And I mean, I don't know. Do people really think that?
For sure. Absolutely.
Yeah.
Because here's the thing. And this goes a little bit to what you were saying a second ago, where, and by the way, this is not a judgment on anybody watching or anybody that is trying to redress some of these things. It's like, when people start taking their credit report seriously for the first time, and they're in their 30s or 40s or God forbid their 50s, and it's a train wreck. It is sometimes a little bit difficult for people. Like in all the thousands and thousands of phone calls that I've had, John, where I did a consultation for people, you would get like maybe 1 out of 20. It would call up like, "Listen, I did it. This is all my stuff. I blew it. I'm trying to settle debt. I screwed up. I did it. This is all me." What happens by the time they would get to me, they're like, they've watched somebody on YouTube or they read some bad stuff on a blog, and they're like, "Hey, listen, these credit bureaus, man, they can't be trusted." It's not them. It's the data's wrong, and I think they put themselves in this position to be ready, like they want to get stuff just removed because they think the whole system is corrupt. So yeah, to answer your question, that actually is a belief that at least the credit repair client side, that's not uncommon.
Yeah, I can only tell you what I know, and what I know from working for one of them for many years, working for one of their partners for many years, and then doing work as an expert for all of them for many years. I've seen nothing to suggest that there's any policy or systemic attitude from the credit bureaus that's negative towards consumers. Do some credit reports contain errors? Yes. Is that indicative of some sort of, an industry that is attacking consumers? I don't know. That seems a little bit like an embellishment.
Yeah.
So I can only tell you from my seat, from John's seat, which respectfully is a front row seat to this industry. I've not seen anything to suggest that's any sort of reality. But it sounds good. It results in clicks.
It does. Yeah.
And look, I've read the deposition transcripts and actually have sat through the depositions of people who work for the bureaus, and they're under oath, so they can't lie. And they're asked questions like this, and they're like, "Man, we have no idea what y'all are talking about. There's no person or people who are responsible for sticking it to the consumer. We all have functions and jobs, and just like every company out there, do big companies make mistakes sometimes? Of course they do, and that's why there's remedies to correct the mistakes that they make."
Yeah. So this ties in maybe to Matt's question. How will Stephen Leary versus Equifax? Are you familiar with this lawsuit?
Nope, never heard of it.
No, never heard of it, Matt. It's not one that I have heard of. It says it exposes extensive flaws and inaccuracies in Equifax's credit reporting system. Yeah, I mean, Matt, I don't know if this is language out of the lawsuit or this is just maybe an embellishment on your part as far as extensive flaws. That's I don't know. That's not a lawsuit that I've heard of.
Yeah, and I'm not involved. I'm not involved in that litigation as an expert, so I have no familiarity with it.
Usually, like I follow the collection, a lot of the collection news, a lot of the news that happens in this industry. This is not a lawsuit that I'm aware of either. If it's something substantial enough, Matt, to make bureaus change policies, this is something that John and I would be familiar with, but I'm not familiar with this one.
Unless it was just filed, a month ago, and then it's so early on in the litigation that no one knows anything about it because they're still kind of collecting documents and responding to complaints, and really on the very, very front end of the curve. So if it's a 10-year-old class action and it's a meaningful class action, then I'm surprised I haven't heard of it. But I don't know if it's a single consumer FCRA lawsuit or if it's something that was filed so recently that it just hasn't kind of blossomed into anything yet. But otherwise, other than just reading about it here tonight, I'm not familiar with it at all.
Yeah, Matt, if you've got a link or something to the complaint, feel free to post it. I'd be curious. Okay, Didi, great show, guys. I have a question for you. What happens to a credit report once someone dies? Is it deleted?
Oh, awesome question. Yeah,
really good. Yeah, that's the first time for that. I've never seen anybody ask that question before.
Yeah, awesome question, Dita. So a couple of things happen. So number one, no, it's not deleted. But a couple of things do happen. So obviously, when a consumer passes away, assuming that this happens in the proper context, meaning that someone passes away and then they go through the process of notifying the funeral home, and the funeral home, I think one of the parties involved, maybe the funeral home, is responsible for letting someone else know about, because of the Social Security issues. So somehow the Social Security Administration becomes aware that you've passed away. I don't, thankfully, knock on wood, thankfully I don't have a lot of relatives who've died yet, and so I haven't gone through the process myself of dealing with that. But eventually the Social Security Administration is made aware that a consumer or a person has died. When that happens, they retire the Social Security number. What that means is, if the credit report is pulled after that, then there is an alert on the credit reports. All three of the credit bureaus have like these Social Security relationships with the SSA, and they get information like this about, fraud associated with Social Security numbers, or the Social Security number that was listed on an application was actually never issued, or the Social Security number on an application has been retired. So that's why these systems exist, to help prevent fraud. But yes, once a consumer has died, the Social Security number is retired, and an indication is made on the credit report, so that if that credit report is pulled, there is a notice that is provided to the end user that this consumer is dead. So that's one of the ways that they deal with it. Another way, another way that they deal with it is, let's say that you have a parent, and that parent has passed away, and you are helping as the executor of the will, and just a family member kind of helping out with all of the logistics. And you contact creditors to let them know, hey, my so-and-so passed away, just want to let you know. Well, they're going to report that to the credit reporting agencies, that the account is now associated with a deceased person. There's actually a code, a Metro 2 code, I think it's the ECOA X code, that indicates that the account is associated with the deceased person. Once that occurs, that credit report is now no longer scorable. So that's actually one of the exclusions in FICO's criteria, is because, David, we may have talked about this in the past, is, what's the minimum scoring criteria for FICO? And it's, this and that and that. And I also kind of throw in at the end, and the consumer can't be deceased. And so that's that issue, is they can't have that ECOA X code on any of their accounts, or the credit report is not going to be scorable. That's obviously a problem, because when you apply for credit, if the creditor can't get a score and they also see this deceased indicator, obviously that should alert someone that we may have a fraudulent application. But no, the credit report is not kind of magically deleted, but all of these notices are associated with it to indicate that the consumer is now deceased. Awesome question. Yeah. I don't get that one a lot.
Yeah, no, I've never gotten that one before. I have gotten the question, hey, my credit report says I am deceased and I'm perfectly fine. We've had a handful of people like that in Credit Versio that's happened. But, Credit Versio being a pretty sizable company with tens of thousands of active users right now, you do see that. You do see, 1 month the credit report came in, and next month it comes in, and it's reporting in the PII section at the very top that the person is deceased. I mean, it's inevitable if you've got volumes of people using the software. Gregory has got a comment. The credit bureaus do try. Once I filed my report about anything I don't recognize, they did take action and tried to get it resolved. Just made sure that I was persistent, and also spoke with a rep. Yeah, great. Yeah, there are people there that are interested in helping you. Jay with a question. Hey, John, why do hard inquiries affect your personal credit for so long? It's like 2 years punishment, or the number. There's so many cards that offer different perks out there.
Yeah, so a couple things. To go back to Greg's comment, all three of the credit bureaus have what they refer to as kind of the Office of Consumer Affairs, or presidential disputes. If you run into a wall dealing with like the normal frontline people, you may want if you, and I'm not saying do this as a credit repair company, I'm saying do this as a legitimate consumer who has a legitimate beef and and isn't getting anywhere. You can actually send a letter to the president of the company. It ends up with the Office of Consumer Affairs, and they have a little bit of a different level of permissions and authority, if you will, to get information corrected. So let's talk about Jay's question about inquiries. So a couple of things. So let me explain let me kind of take your question backwards. You referred to a 2-year punishment. Believe it or not, there is a provision in the Fair Credit Reporting Act that requires the credit reporting agencies to maintain a record of access into your credit report. So it's not just a choice that they're all making to put inquiries on your credit reports when some company chooses to pull it. It's actually a legal requirement in the FCRA. One of the myths, right, that's being actually litigated right now at least 2 of the bureaus is that companies furnish inquiries to the credit bureaus, like Bank of America would furnish an auto loan to a credit bureau. Is that somehow these companies furnish inquiries to the credit bureaus, and that's how they end up on credit reports? Well, that's just simply demonstrably and factually inaccurate. The credit bureaus are the ones that, when they see access into their system, that they're the ones who actually go through and post the record of the access, and they do that because it's a legal requirement. So that's the answer to the why do they exist on your credit report and why are they there for so long on your credit report portion. The first part of your question, Jay, which is why do they affect your credit? If you kind of go back to the beginning of our session here, the answer to the question why, as it pertains to anything affecting your credit score, is because it's predictive of risk. So if inquiries were not at all predictive of credit risk, then they wouldn't be counted in any credit scores, because there's no point in considering something that doesn't have any value when generating your score. The scores have to meet ECOA requirements that they're demonstrably sound, which means you have to be able to demonstrate that they actually work. And considering things that aren't predictive of risk when calculating the score is a great way to prove that your scores do not work. So the only stuff that's considered is the stuff that's actually predictive, and so that's why inquiries are on that list. Just a little bit of Inquiry 101, even though hard inquiries may remain on a credit report for 2 years, they only are fair game for the first 12 months. So even though they're on there cosmetically for an additional 12 months, they're only potentially meaningful in the first 12 months. And in FICO's scoring systems, if they're auto, mortgage, or student loan related, then the first 30 days that they're on file, they're ignored. So if you really want to split hairs, if you have an auto loan inquiry on your credit report, it didn't count for the first 30 days, and after month 12, they don't count. So really that they were only potentially impactful for that little 11-month window of the 24 months that they're going to remain on the credit report. So hopefully that answers the question as to why are they there and why are they impactful to a score. They are the de minimis attribute in a credit score. So if you looked at the pie chart, it's the smallest piece of the pie is that inquiry issue. So you shouldn't have low scores because of inquiries. Inquiries shouldn't really be that much. And despite some pretty common myths, is not all inquiries are considered. There's tons of articles from authoritative sources indicating that if an inquiry is considered, then it may lower your score by a few points, but it's certainly not guaranteed that every hard inquiry is going to have an impact on your score.
Right. Excellent answer. Devin says, I found when applying for a credit increase, when I've been denied the date of the credit score report is months behind. Is that legal? I'm being denied credit for a score that is not current.
So as far as legality goes, and so the requirement to send a notice of adverse action is, I can tell you that the general practice is that letter is sent the same day that the credit report is pulled. So if you applied for a loan and they pulled your credit report on October 12th and they denied your loan, then the adverse action notice is going to be dated October 12th and it's going to go out in the mail automatically. So that sounds like it's not the experience that you had. I don't know that there's any time limit. I think it's actually the way it's worded in the FCRA. I think it's in a timely manner, if I recall correctly. So, in a timely manner, what does that mean? Does that mean in a week or a month or 6 weeks? But if you look at the date of the inquiry on your credit report, you're going to see the date they pulled your report, and so whatever score they got as of that date is the score they used as the basis for their decision, and whatever was on your credit report on that date was also the date that they used as the basis for their decision, or the information they used for the basis for their decision. So, but I got to tell you, I'm not suggesting that Devin's experience is not true. I absolutely agree with you. You're right. I've seen scenarios, David, where a consumer applies for credit, and this is not the fault of the credit bureaus, and it's certainly not the fault of FICO or any credit scoring company. The consumer applies for credit, they're denied credit, and 9 months later they get a letter. It's nuts, and I don't understand why some. I think maybe what it is that some maybe unsophisticated users of credit reports don't understand their obligations to provide those adverse action notices. And then, so they pull credit, they deny credit, they never send out the notices. And then all of a sudden, someday down the road, they become privy to this fact that they have this legal obligation to provide notices of adverse action. And they're like, oh my God, we have never sent out notices of adverse action. And then boom, they just fire off hundreds or thousands of these letters just to kind of get caught up, and then send them out in a timely manner going forward. That's just a theory. I don't know if that's actually true, but yes, Devin, I have seen scenarios where the letter post dates the date of the inquiry by some unusually long period of time.
Jamie says, good to be back. I missed a couple of weeks. Great show as always. Glad to have you back, Jamie. And he does have a question. Do CFPB disputes differ from one that I would submit directly to the CRA? Does the CFPB actually have any authority to resolve issues?
Yeah, so this is the analogy that I often use. Filing a dispute with the CFPB is like bringing your bigger, stronger brother to a fight. And so when you ask about authority, the CFPB, if you look them up in the dictionary, the first word in the dictionary is authority. They absolutely have a ton of authority they regulate the credit reporting agencies as it pertains to credit file accuracy. Yeah. So they are the regulatory agency. If you've ever seen the CFPB dispute portal, it's very different than the credit bureau's dispute portal. Okay, they get different information. Obviously, the CFPB doesn't pull your credit report and have you go through it and identify things that are wrong like you could do if you pulled a credit report from one of the bureaus. So the user experience is certainly very different. But what the CFPB ends up doing on your behalf is they end up contacting the credit bureaus and just kind of letting them know, hey, Mr. Smith has contacted us and blah, blah, blah. And they kind of get involved almost in kind of a secondary or tertiary fashion. They don't perform any of the investigation. The credit bureaus don't send investigation results to the CFPB. But yeah, they're definitely an intimidating figure as it pertains to credit bureaus because of their regulatory authority.
This is not something, John, that was ever a practice at my previous company, but I know that this is, and I'm kind of wondering what the effect is or the result of credit repair companies filing CFPB disputes on behalf of a client, because I mean that was a big thing for a while. Yeah. Where initially when because the CFPB in the grand scheme of things is not a very old organization. And when the ability to dispute through the CFPB came about, I don't know what it was, maybe 10, 12 years ago. I can't remember exactly.
That sounds about right. Yeah.
Yeah, that was the thing to do. And that was the thing to do for a consumer. And then the credit repair companies got on the bandwagon, and I'm not really sure what that did to it, but I heard from so many people in the business like, oh yeah, we're filing CFPB complaints on behalf of the client. And I remember thinking, I really hope it's whatever complaints you're filing are legitimate, because this is going
Yeah.
to ruin that whole platform. And just like we talked about, in fact, I think you told me this, John, early on years ago, that it was a very high percentage of the disputes that bureaus receive come from credit repair organizations. Did you one time tell me it was like 60% or
I
70%? Was
did.
it that high?
I,
Is that
I
right?
did. Yeah,
Okay.
and the past two presidents of the CDIA and the current general counsel of the CDIA, who's been there for decades, have all said the same things, either publicly at different events where I've attended, or they've testified as such in front of Congress. So this isn't a
Yeah.
secret. It's nothing new and contemporary. It's not this isn't speculation. And they've gone on the record to say 50 to 60% of all of the disputes that the credit reporting agencies receive, they believe are coming from credit repair companies. And so
Yeah.
that's where the term jamming and gunking came
Yeah.
from, was the fact that this percentage. Now, if you take that percentage and apply it to the CFPB's data that indicates that the credit bureaus get about 8 million disputes a year, that would suggest that the credit bureaus get 4+ million disputes a year from credit repair companies. This is different than CFPB disputes. This is just straight up credit repair disputes.
Yeah.
The CFPB thing it's a problem for a couple of things. Number one, you're lying to a government agency. To the extent you feel comfortable doing that, more power to you. I think that may be the dumbest thing to do, but whatever. So number one is you're lying to a government agency, and you're using the mail system to do it. That's a federal crime. So that's number one. Number two is you think they're dumb. The CFPB is not dumb. They actually already have a canned letter that they're sending to consumers when they get what they believe to be falsified CFPB complaints. So they're sending a letter out to, and I have it. I have a copy of the letter. It's just a canned letter that indicates, hey, we got your, I'm paraphrasing, we got your dispute. It appears like it didn't come from you, et cetera, et cetera. You think a consumer is not going to rat out some credit repair company?
Oh, for sure.
Oh my
Right.
God, in a New York minute. In a
Right.
New York minute. And so,
Right.
that's another thing. That's another thing to keep in mind. Number three, and I don't think anyone watching this today cares, but I care. The CFPB publishes statistics about the percentage of complaints for certain things, and credit reports has a pretty high is pretty high on their list. I don't know if it's number one, but it's probably, I think it's very close to being number one on the list of complaints. And if they're getting a bunch of bogus complaints from credit repair companies, it's polluting the numbers. Again, I don't think anyone watching me right now cares, but I care. So whenever people talk about, oh my God, the CFPB gets so many complaints about credit reports, I'm like, yeah, some percentage of those are bogus. They're coming from credit repair companies. And here's this letter that they send out. I guess the takeaway is that the perception that's being kind of quasi-validated because it's coming from a reputable organization like the CFPB is not necessarily 100% accurate. Are credit reports high on the list of complaints? Of course they are. No one argues that they're not. But is it as bad as those statistics may suggest? I don't think so.
Yeah, I wonder if, and I doubt this is the case, but I wonder if they have any kind of logic built in that factors, this is the percentage of disputes we feel that are coming from credit repair organizations. You can argue what percentage of those are frivolous. And we just have to do some kind of an equation on the CFPB side to see if that makes sense to factor what these complaints, what percentage of these complaints are real.
Yeah.
So, yeah.
Look,
so in other words,
anyone who's operating, for the people watching, I know you're not, well, I don't think you are, but for the people watching, I think you're not operating a credit repair company. I think you're just watching to learn about credit. But if you don't know what's happening in the world of credit repair companies right now, let me bring you up to speed in 10 seconds. The CFPB is looking to bury them, period. And they're using something called the TSR, the telemarketing sales rule, and they're trying to bury the credit repair industry because they hate them, period.
Yeah.
And if David thinks I'm embellishing, he can say it, but I don't think he
Oh
thinks I'm
no.
embellishing.
No, actually,
So,
not only
yeah.
is that 100% true, John, but that's something that a lot of us who are in this business are not afraid of. I mean, if you look at when the TSR was really applied with muscle to what industry, and that was debt settlement. If you remember that from about a decade
Mm-hmm.
ago, and what did that do to the debt settlement industry? It wiped out 70% of the players, and those were 70% of the players that just needed to go. So I think we're going to see that happen with the credit repair industry, where there's 100,000 companies. They're not going to be able to get all of them, so they're going to do what they always do. They'll set up choke points. So they'll hit the banks, they'll hit credit card processing, and then they'll make it very very difficult for people to operate in a way that's not legitimate. Um, Okay, well, I think that's about it. So, Tori, I saw your question. I will swing back around and answer that for you since we're going to wrap up right now. The letter that you got from your sister, or your sister got. But that's it for today, John. This is a lot of good back and forth, a lot of good
Great
questions. Thank you
stuff.
so much.
Yeah.
And I think the question of the day, they're all great questions, but I think that deceased question from what was that? Yeah, from Dita
Yeah.
was
That's right.
yeah, that was the star of the show. Okay, thank you everybody for joining us today. And again, we'll be gone for 3 weeks, but I'll post a date on our Facebook page, letting you know when we will be back. Thanks, John. I appreciate it.
Thanks,
Take
y'all.
care.
Have a good night.